Monday, December 4th, market analysis, Stan Ehrlich, 10 o'clock California time, just a little after the middle of the trading day for securities. We have some breakage, so to speak, in the stock market indexes, especially in the NASDAQ. But strangely enough, not yet really in the DIA or the Russell, but the Spider, which you're looking at, the E-mini, has broken Friday's low and come down to the bottom of the trading range, the support area that has caused the market to get stuck in this area for a few days now and most of the last 2 weeks. So closing below 4,540 should start another leg down. And that would get down to, in my opinion, the ballpark of 440, 4,440 or 35 area, maybe even a little bit lower than that, and right into the Santa Claus rally coming up a few days before Christmas, which I'm going to detail to the minute and date and the track record that it's been established with those statistics for you this week, hopefully tomorrow. Things are working right now to come up with some answers. Now, the E-mini has come back fairly decently, middle of the range, and we have no downside breakout. There is no close below that number I came up with, 4,540, 41 maybe, but that's what's needed in order to get out of this overbought condition and start a significant leg down. But I'm totally expecting it, and it may be starting today. Next chart. Spider, pretty much the same thing, but now we are not overbought anymore. So even though we're close to the high of the day, it is the same price levels we've seen the market stop at, basically, and only close on Friday once above where we're at right now for the last couple of weeks. So I think we're going to turn down today and maybe make new lows. We're down 260 at the moment in a Spider, which is modest down day, nothing substantial. I want it down about 5.5 in order to get down to those levels and start to break out to the downside. Next chart is the DIA, totally different. New highs since February, I believe, of 22, reasonably close to the all-time highs that we had with the bearish ER sell signal, which was on January 4th of 22, and overbought conditions hasn't yet stopped this rally. Again, today could be the beginning of it. We do have a gap to close back at support at 356. I don't think that's going to be the bottom of the break. I think it's going to be coming back down probably to 350 and very possibly 345. I'm going to vote for the 345. And it'll take 2-3 weeks. Next, the Russell 2000, new highs. Looks like it's going to have a new high close at the moment. It's substantially a new high ground and just took off like a rocket, breaking out of that resistance area that caused it to get stuck for a couple of weeks. And that was on Friday. And we have great follow through. But again, we are overbought. I hate buying stuff that's overbought. Only rare circumstances would I consider doing so, which would be, generally speaking, breakouts, for example, and oversold. I wouldn't sell short unless it was maybe some profound bearish breakout, and I could justify a relatively low risk, but that's not the case here. Minimum upside objective on the bullish head and shoulder bottom, which has acted and is acting perfectly, is 189.75. I'm talking about that for probably at least a couple of weeks. And of course, now we are at 186.60. So by far and away, a very large percentage of that minimum upside objective has already been fulfilled. but overbought conditions allow for it to come back down, probably to 180, 179, maybe a little bit lower than that. It could feasibly even come down to the neckline again. It already did it once. That's typical. It's out of the textbooks. Yeah, the breakout. Oh, beauty, got overbought the day after, or even the day of, in this case, the day after. Resistance stopped the rally on the breakout, came back to the neckline, and off we went. A little stalling for a week or two, but nothing major in terms of bearish activity. Next chart is QQQ, totally different story. The NASDAQ and Qs have been very weak, relatively speaking, to the other indexes, especially, of course, the Russell and the DIA. The spider has been sort of in the middle. We have actually started to close a little tiny bit of the gap, which caused the market to get overbought, and it was about 2.5, 3 weeks ago. I'm thinking that's easily going to be closed on this dip of 2 or 3 weeks that I'm thinking has started, or starting. Doesn't look like it on the DIA and the Russell, of course, but down to the support line, which is either the top of a downward slanting channel, if you like. That works for me. And by the time we get down there, we'll be at the gap closure area of 364. So that's what I'm looking for. Ballpark 364. Next, the NASDAQ futures NQ December futures contract, same story. I'm looking for a move down into the support area. A little bit less detailed situation here. I don't have any gaps to work with. I'm going to say 15 and 060, 055, the very low 1500s. So here we are back to the spider, but it's the 1 minute chart and it's starting to slip a little bit. Commodities, futures, here we go. The E-mini continuation contract, not the December or March, overbought at a resistance level, did stop Friday right smack at the top of the resistance. This morning and last night really opened around unchanged to a hair higher and then dropped off. So we need to get below the lows of the previous 6 or 7 days in order to get the ball rolling on the downside. Next, NASDAQ already has done that, and the rally at this moment is back to a little bit of resistance. So again, any moment, the whole thing rolls over and starts to slide again. Next, bonds. Oh, by the way, excuse me, gold, silver, and platinum are crashing. Big bearish engulfings you'll see in a minute. Bond market slipping off a little. It did come up to the first layer of resistance I talked about last week. And okay, but I'm not, getting very bearish. We're still long from the bottom. And we got an ER3 fill 2 days after the low of the whole move. And it was a green bullish engulfing ER buy signal. So we're still in the trade. Yellow line is our trailing stop, not hit. Next, 10-year notes, same story, long from the bottom. ER3 got filled 2 days after the reversal itself on a little bit of a correction, and this came up to a resistance area. No surprises, pulling back. Did not quite get overbought, but super close. Okay, next chart, and a minor dip, a little bit more, correlates nicely with the dip I'm expecting in the stock market indexes. Crude oil, I think, is going to make new lows for the trend here. We're not oversold yet. We're dipping back into support. I don't see any intermediate to short-term trend change. Resistance on the last couple of rallies stopped right at the resistance area. And the pattern I thought was good has now failed miserably, so I'm going to erase the line there. I claimed at the time that it was so small, it was not that big a deal to begin with, etc. So too bad it didn't work exactly like I expected, but I'm expecting new lows. Watch out, here we come. Natural gas, very oversold, almost a downside gap this morning. It looks like they overlap by a few ticks, so no gap. And if it was a gap, it's so small, it's not necessarily, legitimate. So what we've got is a very oversold condition. And the expectation, let's go back quite a long time here. Nope. Don't see any reason for it to stop where it is right now. But the oversold condition says, be careful. You're about to have a rally. Next, Heating oil, minor support, tested the second time this morning, currently bouncing a little. We're still in this wedge, downward slanting wedge formation. So looks like we're bouncing off of the bottom and, you know, test the top. But we're getting so close to the end of it that it's being forced to break out one way or the other soon. Next, gold and silver and almost platinum have gold and silver, a gigantic bearish ER sell signal. Today's high is way above the high of Friday on a very good rally on Friday. And today's low is below the lows of the previous 3 days so far. Back into a little bit of a support area. So, you know, it's a huge volatile day. Whoops, didn't want to do that. So I'm thinking that we are highly likely to have some sort of retracement immediately. But if you get back up into a little lower than the middle of today's range so far, that's where I'm very interested in going short. Remember, the ER1 is already short. We have a small profit at the moment, and ER3 gets short on retracements. But this is a potentially major, important bearish engulfing signal. Big time. Next, silver. We have the exact same situation. False breakouts, overbought conditions, resistance areas, and this is a new low for 1, 2, 3, 4, 5, 4 days, 4 prior trading days. A new high for the last few months. Excuse me, and in the same day, a lower low than previous 4 days. Of course, it was overbought. This is what happens if you run after markets in overbought conditions on the upside and you're not looking constantly. You could be caught with almost, you know, it hurts. Been there, done that. Over half a century in this business. Next, platinum, bearish engulfing, Japanese candlestick. Therefore, we're supposed to work our way lower. I love these. I wished it was overbought. Then I would be getting a bearish signal like this one. But I built the system to pick tops and bottoms to the exact day as often as it can. And with platinum and gold and silver this year, it has been outstanding. So now we have a sell signal in platinum, but not unofficially our sell signal, but platinum and gold and silver. Precious metals look like they're going Tierra del Fuego, heading south. High grade copper, looking for a bit more of a correction. I think it could get dragged down with the other metals. It was overbought, but that's about all I got. So looking for a little bit more of a dip here. Now, soybeans and the grains. Back into a support area, coming close to oversold conditions. Maybe it's going to dip off to about 12.97, and I cannot rule out by any means 12.84. So a little bit more, maybe 20 cents lower should get us oversold and at the bottom of the support area, and therefore the beginning of a bounce. We got stopped out of our previous long position with a profit today. I could have tightened the stop if I wanted over time and gotten out probably in the 350 or 1350 range, significantly higher, but I wanted to show you what the default settings should be able to do. Good trade. Soybean oil is a heck of a lot better. We're out now for the last 3 weeks, and the market has gone up a little, down a little bit, and is almost at the same price we got out at. Looking for lower lows. Can't help it. I don't see any major trend change here. That head and shoulder top had a minimum downside objective of 50. I know it got to 48 and change. 40 is actually 47.96 or something. Anyway, that doesn't mean it's the lowest, you know, at the bottom of the market. It did for about a month, and now it's looking pretty weak. It could start to make new lows, and I'll have to get bearish to the tune of something like 40. Next, meal. New lows again. Major support area, stopped the rally in overbought conditions. I keep harping on that. Dropped off very sharply on Friday, got oversold today. It's even worse, getting more oversold. So we're getting close to a bounce. And my best shot here, I should put a little support resistance zone in here, starting close to the low of the day already, actually starting at about 402, probably down to about 392. And then it's going to turn up pretty quickly here pretty soon. Next, corn. Hey, we got a buy signal last week. It told you so on the day it happened, like I'm telling you about on silver and gold today. I haven't seen silver and gold and platinum do that kind of thing in a large number of months. Back to corn. Nice. We're just a hair lower on the day at the moment. It's a doji inside trading range day, so it doesn't mean too much at this particular point. This is a bear trend. I can't be very bullish. I don't have any major reason to do so. I've already gotten a decent rally out of the ER buy signal, and it could develop into more. But the first resistance level is stopping it in the last day and a half. Closing above 490 would help it probably pop up to 499, another 10 cents. And that's my best shot for a real problem. And maybe I'm going to get 512 out of it. But that's it. 512 to 516, I think, is the strongest it might get and turn down. So I'm looking for reasons to go short again. Next, wheat. Kind of the same thing. And now I got a reason. It's overbought again. In fact, it went from oversold conditions in 1, 2, 3, 4, 5 days to overbought. It's at a little resistance, not much, and it may still come up to 645, but then down again probably. Next, live cattle. Hey, it did exactly what I thought, and I said in the last few rallies, you had a little bit of a low, usually oversold, like an occasion, that occasion, and now a third one, past tense. So oversold a little, bounced, oversold, bounced, oversold, bounced, oversold, and bounced, and that's new lows today. So what's wrong with this? It gets oversold again. We're almost there. So maybe another 5, 10 bucks or something. And then another bounce up. But this is more important. We're now getting back to a significant support area. In fact, today's lows just begin it. We're at 166. I don't see anything that's causing me to turn bullish immediately, but 166 is important, and it's the low of the day today. Not too much lower then. I can't rule out as low as 61. Next, 161, of course. Hogs. Bear trend, big top, lower lows, oversold, bounce, couldn't do much about it. Starting to slip a little bit in general. I'll pass on the commentary. Let's see what happens tomorrow. OJ, hey, I've got the top of the market again. Bearish engulfing ER sell signal has proven, even after a little bit of a bounce for a day or so, that it's still a very profound high. We're now down to 384 after ER1 got short at 416. The green line represents the entry and the current profit. Whoops, a little bit short. There we go. On this trade. I'm goofing up here. Okay. And the yellow line represents, of course, the STS stop. So it's looking very good. Now we're getting a little bit closer to oversold, but not really. This could drop a chunk more before we get a good bounce. Next is cocoa. We might see something similar here. It's too bad I didn't get a sell signal at the top, but the overbought conditions were pretty significant, and some divergences, I should add. So my first major support area I've got here, a blue line, 3,767. Next chart is coffee. Again, in this case, overbought in a resistance area Thursday and Friday, with a poor close on Friday, a little lower on the day after new highs, and very accurately up to previous tops. We're coming back down, I think, at a minimum to 164. There is a couple of minor layers of support even dropping off. So the lowest I could expect at this particular point on this break would probably be in the low 150s. Next, sugar did bounce off of that support area and oversold conditions. The trend is still up. There's no long-term trend change here that I can see. So I'm expecting a rally now back up to 2680 and very possibly up to 28 again, a new high ground for the whole trend, maybe. Let's see how much strength we get here. Next, caught in the rag. Last one before we finish this loop. Testing support, trend intermediate to short-term down, but this support area is very profound. We have seen it for over a year now be bounced off of a few times with months in between. So will we get another shot back up to about 90 again? I'm not going to be surprised. I've got to watch to see if we have a breakout to the downside to get more bearish. So kind of watching for a buy signal, to be honest with you, but not too sure. Next, E-mini. Let's check the individual short-term charts real quick here. And we slipped off very slightly in the spider in the last 15, 25 minutes or so. Nothing dramatic. Tested the opening high of the day for the SPY. You guys have a great day. Mañana.